On this unit, we're going to analyze and register the transaction related to the establishment of the company and the subscription of the initial capital. However, before this, we briefly recall the previous unit. It focused on the presentation of the operating procedure that we aim to illustrate through this video tutorial. Thus, we introduced the formats that we use to prepare a balance sheet and an income statement, as well as the outline of the operating procedure that we will follow to analyze and account for the different transactions with which a company has been involved in a specific period of time. First of all, we will need a format to calculate the net cash flow for the period. This format has an instrumental nature, since it's aimed at facilitating the calculation of the balance of cash that will be reflected on the balance sheet. Secondly, the format of the income statement. Finally, the format of the balance sheet. As is apparent, the three formats include columns aimed at making explicit the intermediate calculations. In this and the following units, we're going to account for the transactions that the wording of Copen case describes. To that end, we will follow the operating procedure that we also presented in the previous unit. We're going to draw from every transaction the potential collections and/or payments, if any. Then we will reflect them on the cash flow table. We're also going to identify and calculate the possible incomes and/or expenses related to each transaction. Then we will include them in the income statement. Finally, we will identify other variations in assets, liabilities, and/or capital related to each transaction, and afterwards we will reflect them on the balance sheet. Once we have analyzed every transaction, the cash flow table and the income statement will be completed, but not the balance sheet, because data from both should also be recorded on it. The net cash flow of the period that was calculated by means of the cash flow table should thereby be added up to the initial cash balance. In this case, it is 0, in order to calculate the final cash balance of the period. Then, the final cash balance of the period should be posted on the balance sheet. On the other hand, the net income of the period is also recorded on the balance sheet as retained earnings, as dividends, or a mix of both. Let's start to account for the first transaction, related to the establishment of Copen and the subscription of capital by its shareholders or owners. First, in accordance to the above described procedure, we identify the possible collections and/or payments related to capital subscription that could have taken place in 2016, which means to assess whether this transaction implies some cash flow in 2016. The answer is that a collection took place in 2016 due to this transaction. The collection related to the fact that the shareholders purchased and paid up the shares that Copen issued. We should reflect a collection because the wording states that the shareholders paid the shares in cash when purchasing them. And we record this collection in the cash flow table. In spite of the fact that in this case the intermediate calculations are obvious, it's a good idea to make this explicit. A large amount of numeric data has to be usually handled to prepare financial statements. That's why it's very important to strictly apply the selected procedure. It's the best way to prevent errors. Now we identify the potential incomes and expenses that could have taken place in 2016 related to the subscription of the initial capital. We should report an income if the value of Copen increases as a result of the subscription of the collection of the initial capital. In other words, we should report an income if the company's wealth grows due to this transaction. On the other hand, we should report an expense if the value of Copen reduces as a consequence of this transaction. That's to say, if the company's wealth decreases due to this transaction. It's important to point out that within this context, company means the entire company shareholders unit. Well, we can state that this transaction does not imply incomes or expenses. The wealth of the unit company shareholders does not grow or fall due to this transaction. When subscribing the capital of a company, the shareholders are just moving their money from one pocket to another. It does not create value. This transaction has therefore no impact on the income statement. Finally, we analyze how the subscription of the initial capital affects to other assets, liabilities, or capital. In short, we need to assess whether the fact that the shareholders subscribe and pay the initial capital of COPE modifies the belongings, the rights, the liabilities, or the capital of the company. It seems clear that this transaction should be reflected on the balance sheet as paid-in capital, because the shareholders have subscribed and paid up the initial capital. Let's recall that the part of the balance sheet known as owners or shareholders' equity represents money belonging to shareholders. That's why owners' contributions related to subscription of shares are reported on that section of the balance sheet. To conclude, it's necessary to point out that the balance sheet doesn't show at this point in time any cash variation. This is because we will only reflect the impact of cash of all the transaction once we have calculated the net cash flow of the period. We therefore reflect on the balance sheet the impact of this transaction. Let's summarize this unit. We have accounted for the first transaction. It's related to the subscription and payment of the initial capital of COPE by its shareholders. Regarding cash flow, that's to say, collections and payments, due to this transaction, COPE collected 100,000 euros. However, this transaction has no effect on the income statement because there are no incomes or expenses related to it. This is because the subscription and payment of the initial capital does not change the value of the company, or in other words, does not change the wealth of the company. Let's remember that within this context, company means the entire company shareholders unit. Finally, the balance sheet shows now the subscription of the initial capital. In the next video, we analyze and post the next transaction, which describes the purchase of raw materials in 2016.